Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. We just got done interviewing Dr. Dick Dykman. He is an orthodontist out of Arizona, and I will say that he is one of the longest practitioners of IBC that I'm aware of. How about you?
Yeah, I totally agree.
Yeah, there's a ton of really good information that came out of it. One thing that I'll add real quick was I was impressed that the second person that Dick spoke to in regards to IBC was actually Nelson Nash himself. I thought that was pretty cool.
That was cool. What I'm excited about this show is at least when I first heard about the infinite banking concept, I had a lot of questions and concerns. Does this work? Why isn't everybody doing it? How does it work? But I wish I would have been able to hear Dick Dykman or somebody else who's been practicing IBC for over 14 years to kind of share some of the things that they like about it and how they used it and things that they don't like about it. So I think there's some very good information. You can hear this from somebody who's been practicing it not only for 14 years, but Dick is like one of the power users. He's going to share how he was using this to pay his overhead and his groceries. Right? So, very good episode.
That's right. I'll just jump in here and share my own thoughts.
I didn't know you needed to be set up if I look towards you, but Cameron, what were some of the highlights that that you liked?
Oh, thanks, Anthony. I appreciate you. It's the segue. Two things, really. One, it's the biggest question that I kind of took away from that conversation was Dick was, am I too old for this? Right? I cannot tell you how many times that I've got that question from somebody that's approaching retirement and just has that concern is you think you need this super long runway, or maybe they're just kind of, for lack of a better word, short-sighted, right? Because, again, you're looking at this as a cash management tool. And if you're 60 years old, man, you're still planning for 25, 30 years out in the future. And so that's one question that I think Dick does a great job of addressing in this. And then also on the other side of it is what we talked to him about was, hey, what advice would you have for a young dentist or a young professional that's starting out in their career? And you know what? Traditional advice, right, is what most of these young not young advisors, but young professionals are getting right now. And traditional advice will not bring you financial freedom. So hope you guys enjoy it.
Enjoy the episode.
Take care. Dick, thank you for joining us today. If you wouldn't mind, start by telling us how you first heard about IBC.
Yeah, and again, guys, thanks very much for having me. It's really a pleasure to be here in Las Vegas. I was 64 years of age, and I'm working as an orthodontist, and I have a very close friend who has a financial planner that I had met in the past, and he called me up and said, hey, I need a forum, some location where we can meet as about 5 or 6 people and hear about a program that has to do with finance. Well, as a dentist, I'm always interested in learning another way to do financing, and so we met for a meeting, and I was there, and 4 of the family members of the chiropractor who had set up this meeting, and then his financial planner was there, and he spent about 2 hours, and as I listened and as I watched and as I observed, I began to recognize that this was something that was remarkable. So remarkable that I had a hard time believing that it was true. And so I asked the consultant or the financial advisor to send me a book. And the book was sent to me, and I read the book and was even more disbelieving. So I made an appointment and spent some time on the phone with the author of the book, who was kind enough to spend some time with me. And basically, the moment that I heard the full explanation of how and why this came about and how the book came to exist, I was ready to get started, and that's exactly what I did.
Wait, so the second person that explained IBC to you was Nelson Nash himself?
That's correct. And so I was blessed to not only be able to chat with Nelson right off the bat, but we became very close friends. And on one day that I can remember particularly, he came to Arizona in the winter, and I took Nelson and his wonderful wife, and we drove all the way up to the mountains where he could see the remarkable forest in Arizona covered with snow. We had a wonderful day talking about snow and trees as well as IBC.
Very cool. So you'd mentioned there that you were kind of infatuated. I don't know how to say the word.
Yeah.
You're impressed by the concept there. Was there any initial concerns that you had in regards to IBC when you first heard about it?
Absolutely. How is it possible for something to be this powerful and I haven't heard about it? Why would no one have mentioned this? Why would no banker, no advisor, no financial advisor, no attorneys, nobody who was dealing with me and my finances had ever mentioned anything like this? In fact, I was advised right from day one of walking out of graduate school to avoid whole life insurance. Well,
Really?
and here I'm listening to a presentation which is completely based upon a concept that uses participating whole life insurance, and I was completely disbelieving and quite frankly upset.
So let's dive a little deeper into that. This is something that you were taught at an early age, stay away from this financial product. But then many years later, here's a guy saying this product can help you in your business and help your family. How were you able to reconcile that?
Learning more about it and realizing that once an individual can learn sufficiently what participating whole life insurance really is, that means what the product is, and then having a book that can guide you on the utilization of what the product is a remarkable revelation. I mean, it required no effort on my part, recognizing that I already had many, many different types of life insurance, but I had no life insurance that was a financial tool. It was evident to me in the first several hours that this was a financial tool. Yes, it was life insurance, but it was really designed as a financial tool.
Okay, so one of your first kind of concerns were, well, this is a product that I've been told to stay away from. And so you were able to get over that obstacle. Were there any other obstacles or concerns you had at the beginning?
The primary obstacle was to make sure that I could replace the insurance, the death benefit that I had in my other policies with the new policies. And quite frankly, it took 3 years. And during that time of really duplicating the same amount of death benefit, I created an enormous amount of cash value in those policies and recognized that not only was I amazed at what had occurred, but I had to start teaching the process myself.
So you heard about it, and then how quickly did you move into implementation? Was it a month, 2 months, 6 months, a year?
No, it took me a little bit longer. I would say, getting to a year is a little bit closer. The primary reason for it is that I wanted to go in a big way, and so I took monies out of qualified funds, cash out of qualified funds, and I took cash wherever I could find it and applied it in order to get started, not only with a policy on me, but a policy with all of my children.
And your wife.
And ultimately my wife, not initially. Initially I was focusing on me and the children, but ultimately my wife was blessed to be able to get a policy also because she does have a medical condition that requires some consideration, and we were blessed. I mean, we were able to get a wonderful policy on her despite the medical.
Great news. And after you kind of started the implementation process, how have you been able to use that in your business?
So, wonderful question. I hope that everybody realizes that the real power of the financial tool with the infinite banking system is that the cash value is available for the individual who is in control of the policies to borrow against the policies from the insurance company without any hesitation, without any paperwork, that basically allows that cash to be utilized for any purpose, for service, for acquisition of equipment, for overhead costs, and repay it with the earned income that is part of any dental practice, any professional practice. There is earned income, and being able to utilize that for paying back to the policy, or paying back to the insurance company, so that the banking system becomes a flow of money that no longer is from me or my business away to other people, but a flow of money that stays in a place where it's moving from me to the insurance company, back to me, to the insurance company, back to me, back to the insurance company. It's a phenomenal way of having a financial tool that allows the utilization of that financing tool for any form of purchase or payment.
So you mean they didn't teach that to you in dental school?
Unfortunately, I don't know about dental schools today, but during my dental training, I actually looked back when I realized this. I looked back and I looked to see if there was any business training, and absolutely none, particularly as it relates to life insurance.
That was a joke, by the way. But I was joking around the fact that right, they taught you how to be a dentist, but they didn't teach you kind of the banking piece of your practice that you had.
That is one of the biggest frustrations that all of us have, and today my biggest joy is that when I have young people in the dental chair and I'm working with them orthodontically, I always have a conversation about money and the flow of money and finance, so that they can learn that there is a world of finance that has very little to do with credit cards and cash.
How far into your career were you when you heard about banking?
Well, so I started my practice in 1974, and I was 64 when I heard about this. So, oh my gosh, if I had been able, so that was, I was 33 years of age. So can you imagine if I had had 30 years of being able to start this process and have policies that were now matured to 30 years? Oh my goodness, I would be in such a different place today. It's just remarkable to me. But luckily I've got 14 years, so yeah, that's better than zero.
I agree. And so in regards to that, what type of advice would you give maybe another professional that's just starting out in their career?
Well, the first place is work hard, be as consistent and as efficient as you can, live well within your means, and take all of those after-tax dollars and first put them into this process, develop the process to the maximum amount that you can relative to the differential that you have between your earned income and your expenses. And once the process is in place strongly enough, then take the cash value and start immediately using it in your practice. Immediately use it for the acquisition of equipment, because in the past, when I needed a piece of equipment, I would always invariably have to finance it. I would go to a bank, I would go to a company, and I would acquire the equipment, and I would pay it back from the earned income of the practice. Today, what I can do is simply call up the insurance company, ask for the money that I need. The money ends up in my checking account very quickly, within several days, and I can acquire any piece of equipment for cash and pay back for the equipment to the insurance company in terms that I can determine. And that spread between what I have to pay to the insurance company for the borrowed money and what the practice can be charged for the use of the money is what funds the policies. And so learning how to manage the money that is available because of the cash value in the policies is wonderful. So I finance every bit of my life. Our groceries are financed with the IBC system. Our gasoline is financed. Our cars are financed. Our overhead is financed. Literally, our life is financed using the policies as collateral, so that we can borrow money from the insurance company, use it for whatever purposes we choose, and then pay it back to the insurance company, admittedly with insurance, but ultimately all of that principal and all of that interest ends up back in the policies. It's the wonder of the system.
Have you ever, so let's say, for example, that you bought some equipment instead of financing it. You actually paid for it in cash. Did they give you a discount?
Absolutely. If you go to buy anything and you're willing to buy it with cash, you're always going to get a better deal than you will if you go to finance it, unless the company has figured out a way that they can effectively sell you the product as well as the financing and make it look like you're getting a better deal. We all know. Ultimately, the best way to acquire any kind of a service and or equipment is to pay with cash. But if you use your own cash, here's one of the little nuggets about this remarkable system. If you use your own cash, that means your after-tax dollars that you've earned, you've marketed, you've spent time, you've acquired the cash from patients for your practice. If you take that money and give it to other people, it's gone forever. In my circumstance, in all the people that I've taught, all the people that I know who utilize this, you still earn the money. You still have to pay your overhead. However, the overhead expense does not come out of the cash of the practice. It comes in the way of a loan from the insurance company, which comes because of the policies that are in the IBC system, and then ultimately the cash in the practice pays back that loan to the insurance company. It is a absolute marvel.
Okay, awesome. Now, you finance the piece of equipment, and let's say there's a pandemic or something, and you have to close your practice. Typically, if you were financing it, that finance company is going to want their payment every month, right? So what happens when you're financing this through your policy?
It's a very, very good question. So let's all think practically. Who owns your car until the day it's paid off? Obviously.
The lender, the bank.
Yeah.
Who owns your equipment until the day that it's paid off?
The bank.
So if you're the banker, by utilizing the IBC system, then if you can't make a payment, can you decide as the banker to delay a payment?
Yes.
Absolutely. So as a result, since you're in full control of the money that you are managing because of the portfolio of the bank, of the policies that are in your banking system, you can make not only alterations of the terms, but alterations of the interest. You can do anything because you're in full control of the money. It is an absolute joy. So, in particular, during this pandemic, there were certain payments that my wife and I needed to make, and we just simply delayed those and picked up for them afterwards as soon as the shutdown was stopped.
Great. So you bought this equipment that you were going to buy anyways. However, but by financing it with Infinite Banking Concept, not only did you pay less for it, but you also had that flexibility when something happens and you can't make the payment that month.
Totally. That's the absolute joy of this. Not only that, you don't have to go through all sorts of paperwork in order to acquire the loan, and you don't have to have any fear with regards to any kind of banks coming back and saying, because you've missed that payment, we changed the interest rate, or because you've done this or because you've done that. You don't have to answer to the people who normally, in the usual context of finance, are in control of the money that you borrow. That's over. So in my life, I am in control of the money that I borrow, even though I still owe to pay it back to the insurance company. Ultimately, there are many different ways to do that, and that's something that we can talk about at another podcast.
Perfect.
Yeah,
Perfect.
Look forward to that. Looking back, when you first started, is there anything that you may have done differently?
Sure. If I could have, I would have started a policy on every one of the family members. So one of my sons was still overseas, and I was unable to start a policy on him. And I was unable to start a policy on my wife as quickly as I wanted, mainly because of her medical situation. But the reality is, looking back, I wish I had had even more cash to put into more policies so that I could have the maximum working capacity of the IBC system for my family.
Fantastic. Now, you'd mentioned that you have policies on the kids. So how have you taught them about the infinite banking concept?
Very good question again. One of the absolute principles that I teach for all the people that I teach for IBC is to say, if you start this, one of the tremendous advantages of the system is that you are creating a legacy that ultimately will go to your children. You must take the time, daily, weekly at the minimum, daily at the most, where you can review with them how and why the system works. And the reason for it is that if the children learn how to use this correctly, then ultimately the level of the banking that you have been able to achieve for yourself will be better for your children, and then it will be better for their children, and then it will be better for their children. In other words, with every single generation, the process becomes better. And that is all related to how the system works and how it is managed by those individuals who are practicing IBC.
Perfect. What would you say to someone who's maybe they're on the fence? Like, well, I read the book, I've listened to the podcast, and it sounds good, but I don't know. I'm on the fence.
Come in and spend some more time, look at actual policies. So in my case, what I do is I actually pull out actual policies that I have in my family, and I show annual reports so that individuals can see the annual report, see what the policies have done as far as performance of creation of the cash value, and so that individuals can see how well that occurred despite the fact that there are outstanding loans against a policy. So to be clear, to understand, all of my policies have some level of outstanding loans. And that's something that will continue until the day I pass. And on the day that I pass, then that death benefit will be able to pay off those loans.
Great point. Is maybe can you touch on some of the benefits of having a loan against your policy? Because I don't think a lot of people understand that. They think they always have to have a policy that's completely full.
Well, here's what I tell my clients. The cash sitting in the policy is an advantage for the insurance company because they can ultimately apply that to their various investments, which is important for the well-being of the company. But they're only allowed to set up loans to a certain extent for the assets that they have in their company. So they're not going to jeopardize the company by creating the loan. But the point is that for the client, that means the person who is the IBC practitioner, having that money as a loan replaces a relationship with a bank. So think about it for a moment. The insurance company is simply going to place a lien against the cash value in the policies, which are part of the family policy portfolio, whereas if a bank lends you money, then they will use collateral that you provide, but for the most part, when you pay it back, all that they're going to do is simply forgive that particular collateral, but if you want to borrow money again, you got to go back to them again and replace the collateral. In this circumstance, something remarkable happens. During the time of repaying the loan to the insurance company, the money that you have invested in the policies, that means the money that you have spent as original cash and as the payment for death benefit, will continue to grow. That means a true compounding growth of that money, despite the fact that you've borrowed money. So when you're done paying the loan, you actually have more money in your portfolio of policies than you started out with the loan. So you are literally whole. That means you've recaptured the expense, you've recaptured the principal, you've recaptured the interest. There is no comparison to using this system for finance compared to the conventional world.
What would you say is your exit strategy on the back end of some of these policies and as you're kind of approaching retirement?
Well, I don't know that I want to retire, but because I really do love what I do, not only for teaching the banking, but also for the orthodontics. I just absolutely have a blast. But regardless, there are really tremendously variable ways that can be favorably utilized for maintaining the policies so that the permanent life insurance, which is part of the life insurance policies, can be maintained. And recognize that every year that I pay for the deposit of the premiums, every year that I add any kind of additional cash to the policies, I end up with more cash value in the policy, more death benefit in the policy. Literally, the policy is stronger every year that I maintain it. So therefore, ultimately, my death benefit is one of the resources that can be used by my family when and if I pass, in order to make all of the policies clean with regards to loans. But having said that, there's another reality, and that is that Brenda and I can readily take money as a loan from the policies for retirement income and have no impact ultimately on the growth of those policies. I can end up with the same amount of cash value in the policy after 20 to 25 years of retirement as when I started the process of borrowing money out for retirement living. The client, the prospect, the individual who is reading the book absolutely needs to turn to you, Cameron, or to Anthony in order to learn the details on how to do that. But the exit strategy is a remarkably simple way to proceed, and the more that you create as far as the cash value and as far as the death benefit in your policies, the bigger that you can make your policies grow, the more cash you will have available for borrowing as retirement income.
So thanks for sharing that. As you've just shared kind of a pretty positive approach to IBC with us, is there anything looking back now, did you have any big struggles with IBC along the way?
I really can't say that I had any struggle other than at the beginning coming up with as much cash as I wanted to put into them.
Okay, so you were 64 when you got your first policy.
Correct.
Have you gotten another policy on yourself since then?
Yes.
Okay, and how old were you?
The second policy, I was 66. The third policy, I was 68. So you're beginning to see every 2 years, the policies grow well enough in their cash value that it's possible to get more policies. Now, I do not physically own all of those policies. Some of the policies are owned by my children on me. Some of them I own on myself. Some of them Brenda owns on me. The point is, the more policies that I was able to acquire to maximize the death benefit that I qualified for was my goal. Not only for me, but also for the children as well as for Brenda.
Okay, so what would you say to somebody, because there's a common misconception is, man, I'm too old to get life insurance.
Yep. And it's a very common misconception, and it's really a myth. So the only difference between a policy, so I'll use my oldest son. So he was 30 when he got started. I was 64. The only difference for exactly the same amount of money deposited with the insurance company. So in one case, I have a $30,000 policy. Jonas has a $30,000 policy. The only difference between the two, no difference in cash. The difference was the dollar amount of the death benefit. So my death benefit was lower. His death benefit was higher for the same amount of money placed into the policy. Very important to understand. The banking function is not compromised according to age.
Okay, let's talk a little bit about death benefit. A lot common, or like a typical financial planner will say, you don't need life insurance once you're 65, and you're a little older than 65. What are your thoughts? Do you still need death benefit?
So I think that I have a decent question about that. Ultimately, money is a means of exchange, and it has buying power. Every year that the government is forced to print more money, the buying power of the dollar goes down. Unfortunately, all three of my children are well educated, but none of them chose to be professionals. They do not work for themselves. Therefore, they all need to have some financial security, and there is no way that I could have created that with a standard asset portfolio. So my belief is that this particular system has allowed me to set up a legacy that is way better, way greater, way more secure than anything I could have created by working and saving and creating an asset portfolio.
Okay, so you'd mentioned about using that death benefit for the children. What about Brenda? Like, don't you think? What do you think her views are now? Like, if something, God forbid, were to happen to you?
Yep. So Brenda understands fully that I've taken care of the maximum amount of death benefit that I could qualify for new policies. However, for every policy that we have, we are every year attempting to grow the death benefit in addition to what was originally proposed with the illustration in the policy. So Brenda is completely taken care of because ultimately Brenda will have to take care of another obligation, and that obligation is that she needs to maintain the policies on her, and she also needs to help the boys with the policies that they have, so that again the death benefit will be the engine that creates the continuation of the legacy for the family.
Awesome. Now, a lot of times when we're talking about IBC, we're talking about numbers and finance and cash flow. But you've been doing it so long. Is there like another intangible benefit that you're like, oh man, this also maybe relieve this stress, or oh, this is cool because?
Well, I'm sure that everybody who's listening has taken the time to fill out a loan application with the bank, has gone through the work to develop a mortgage. Quite frankly, I still have one third-party lender who is a bank that understands what I'm doing. But other than that, 100% of all of the loans that our family uses for life come from the banking system, and the stress level is literally removed for the acquisition of funds. So again, during this pandemic time, there was absolutely no problem in having access to cash. I am amazed at the comfort level that can be achieved. So the main intangible is that I have less chance of having severe mental disease.
Peace of mind will help, right?
Peace of mind.
Just
Yep.
speaking in terms of big goals, how has IBC kind of helped you achieve some of these goals that you've laid out?
Well, I have been able to do basically whatever I would like to do with regards to investments or automobiles or lifestyle or vacations. I mean, it has basically financed all of our life. And again, the part that I need to emphasize is that it is absolutely remarkable what happens when you take after-tax dollars. That means the after-tax dollars that you no longer need for regular expenses, and can place those in a location where they have been taxed once and never taxed again, and have access to that money because it is growing on a tax-free basis. It literally emphasizes to anybody who spends a little bit of time looking at it why the cash value in the policies can grow so dramatically, because you are minimizing the taxation, you're minimizing the loss, you are not giving your after-tax dollars to someone else. You will have completely eliminated opportunity cost relative to losing the value of money that can work for you. It's a remarkable system.
Wow.
Yeah.
Well said, Dick. Thank you.
My pleasure. I'm delighted to be with you guys. It's a great privilege to be able to work with both of you. I know that you do a wonderful job, and that's the other part that is really important for everybody who's listening. This is a system that requires ethical work on the standpoint of the agent, because we want to, in effect, minimize the commissions and maximize your opportunity to become a banker. And we have all sorts of ways that we can show you that we do that. The point is, this is all about using the life insurance as a financial tool. It is not about utilizing the life insurance policy as a method of having death benefit. It is a privilege to have the death benefit as well, but the main thing is you want to become a banker in control of your own money and in a way that it will grow in a remarkable way.
Awesome, Dick. Thanks so much for your insights. I know you've been a great practitioner of this strategy for a long time, so thank you for sharing.
It's my pleasure. Really, thank you very much for letting me participate.
Our pleasure. Thank you. We're honored to have you, Dick.